Hello traders, in today's video we're diving into some important market updates and economic factors that could impact your trading decisions. Let's break it down. Let's start with the US dollar index. It's been holding steady, hovering around the 106 level. While there's no clear reason behind its decline, tariff volatility seems to be fading. Additionally, the sentiment that has surrounded the American exceptionalism after the president election might be cooling off a bit. Looking at the technicals, the US dollar index is showing some weakness. It's been consolidating in a downward channel, and with the relative strength index under 40, there's clear bearish momentum. If it breaks below 106, it could head towards its 3-month low of 105.41. Moving on to oil. Prices closed lower last Friday, mainly due to fading risks in the Middle East and uncertainty around a peace agreement in Ukraine. The US added oil rigs for the fourth consecutive week, which is keeping the market on edge. However, overall, oil prices have been stuck in a narrow range between $70 and $74 a barrel since the start of the month. If crude oil can break above 73.52, it could push towards 74.75 and possibly 75.82, but if it drops below 70, it could further decline towards 67.5. Now let's talk about gold. Prices are still trading near $2,930 after reaching an all-time high of over $2,955. Despite a bit of a pullback, the demand for gold as a safe haven asset remains strong, driven by concerns over global trade tensions and inflation. The RSI is still showing bullish momentum, but after hitting record highs, gold might see some consolidation. If it manages to break the 2,955 resistance, it could head towards $3,000. But if it struggles, we might see a dip back down to $2,900 or even $2,850. The AUD/USD has been climbing, hitting its highest point this year, near 0.64. The Reserve Bank of Australia is staying cautious about rate cuts, and the job market is looking strong, with 44,000 new jobs added in January. If AUD/USD can hold above 0.64, it might test new highs near 0.645. But on the downside, watch for support around 0.63. Finally, let's check in on USD/JPY. The dollar hit its lowest since December last week, mostly due to weak consumer expectations and concerns over rising bond yields in Japan. The USD/JPY is testing key levels, and right now there's bearish momentum. If it falls below 148.93, it could push further down to 147.35. On the other hand, if we see a bounce, the next resistance could be around 152. So to wrap things up, the US dollar index is showing weakness. Oil prices are range bound. Gold remains bullish despite a correction. The Aussie dollar is on the rise, and USD/JPY is under pressure. Make sure to keep an eye on these levels as they could provide great trading opportunities in the coming days. Thanks for watching, and if you found this video helpful, don't forget to like and subscribe.